Good morning everyone. My name's Doc and welcome back to the channel. Today's video is going to be my 2024 performance review and lessons learned video. I did one of these for 2023, so if you guys watched that one, it's going to be more or less the same, hopefully a little bit better structured than the last video. A couple new sections such as needs improvement, and I separated highlights, lowlights, and quarter by quarter just like last year. So yeah, a lot has changed in 2024. The mistakes that I made in 2023, a lot of them were improved on. Some of them you guys will see kind of repeating a little bit. But nonetheless, I'm pretty thrilled and pretty happy with my performance in 2024, but that does not mean that I did not make mistakes. And that's what I think drives the most growth for anything you do in life, is you learn the most from things that you fuck up, right? I think losing is what teaches you everything, and winning teaches you next to nothing, right? So we want to embrace those mistakes and look at them, kind of an open heart, open mind, and kind of do this publicly, which is why I do these things publicly. Is, I'm not trying to shy away from any of the mistakes I make. Maybe I don't share as much as I used to on Twitter and stuff like that, but I'm still an open book when it comes to these things, and that's what this video is for. So just kind of to say in the beginning, this video is for me, right? It's documenting my own journey. It's kind of an open review to myself that I can watch maybe next year again, right? Like I just finished watching my 2023 one to see what I was going through at the time. And I'll probably watch this video next year myself, but I want to put it out there publicly because I know maybe there's someone out there that can learn from these kind of things. So why not just do it publicly? Anyways, let's get into it. So going into 2024, my biggest goals, as you guys can see on your screen here, is to take more risk or bet bigger. I think that's naturally one of the hardest things for me to do. My temperament, my personality is a little bit more risk adverse. I'm not the guy that's going zero or hero. I'm not the guy that's going full stack into the trenches. I like safety. I like having cash. I like playing the risk curve. I like managing my risk. I like keeping my gains, right? Those are more important for me than hitting 100x's, right? So my natural temperament is to protect versus growing. But I learned through the 2023 kind of trending market that the most value that I extracted in 2023 wasn't from trading ranges, wasn't from max longing the bottom. It was really from spot holds that did multiples, right? So call it the trenches, call it being early to a coin, call it speculating on, mispriced opportunities in the market. Really kind of the buy and hold spot plays made up a lot of the gains, right? So positional trading, basically, if I had to TLDR everything I'm saying here, having a lot of exposure to the market that you log in every day, right? Not being someone that's trying to out trade a trending market, because you can do very well trading ranges. You can do very well trading an uptrend. But having a lot of chips on the table for when the market does nutty moves like it did right here or right here or right here, right? Having exposure to the market during these times amplifies your capital better than anything else. So this leads on to the next thing is how can I work smarter and not more hours, right? So constantly being a day trader, intraday trader, interweek trader. I'm up all hours of the night. If an alert goes off, this was me in 2023. If an alert goes off 2 a.m, I'm up, I'm ready to trade. That's not the healthiest for lifestyle. That's not the healthiest for longevity. That's going to lead to, just poor health and burnout and everything like that. So one of the goals that I had in 2024 was, can I work smarter? Can I extract more value from the market in less moves, right? Can I get from A to B in 2 steps instead of 14? Can I take less trades? Can I size bigger into the high conviction trades that I have, right? If I have max conviction in something, do I have the guts and courage to actually bet proportionate to my conviction, right? Those are the things that I really tried to focus on in 2024 is, there's this great MGNR quote or tweet that says something like 5 times a year, there's free money on the floor, pick it up and then do nothing, outperformance. And I've seen that same thing throughout my entire journey, is that the bulk of my gains come in very key moments, select moments, and betting right at the right moments really accounts for maximum growth versus being active every single day, every single hour, and trying to extract max value that way. So That was number two, right? Focus on my health, get more sleep, be better mentally healthy, and maybe take less trades to get the same kind of growth, right? And the final one was a big focus on for me as my portfolio started growing to values that actually mattered, right? I didn't start in crypto with a lot of capital. I think like a lot of you guys, I started with pennies or whatever, started with dust and grew from there. But my portfolio got to values at the end of, or at the start of 2024 that I deemed worthwhile for real life, right? So the focus there was, how do I scale this money upwards versus continue to build? So when you're building a portfolio, let's take an example, you're looking to grab a bunch of small wins, right? And compound those small wins to get to a decent sized stack. Once you get a decent sized stack, it's more about, how do I grow this stack? How do I scale this instead of continue adding chips, right? If you add, if you have one marble, getting 2 marbles feels like a big jump, right? You've 2x the number of marbles you have, right? But once you have 100, getting 101, right? Getting one more marble feels like nothing, right? So the bigger your portfolio gets, the more it's about scaling instead of building. That was a big part of my mission statement going into 2024 is, can I scale this portfolio in a meaningful way and find conviction bets with large size? So they all kind of go hand in hand. From here, you guys will kind of see how I attacked these things, right? What did I do in Q1, Q2 to basically abide by my mission statement going into 2024? So let's get into it. Before I pull this up, you're not going to be able to see my cursor, so I'm going to have to probably switch between two things. Just a little note. Okay, here we go. So kind of color coordinated it a little bit. But Q1, right? There's a mental reset, right? If you guys can look at the Bitcoin chart here, we were crabbing around kind of the end of December. There was a lot of volatility to trade, but I had felt that a lot of things had topped, right? I was in Render, I was in a couple other coins. I'd felt that the kind of steam was petering out on some of these plays, so I took some chips off the table. And I was looking for discounts, right? I'd sold Solana going into that rally. I was looking to rebuy it. I was, playing I was looking for creating dip buying plans. So I was getting a little bit of a mental reset right around Christmas, right around New Year's. And that was perfect for me. After a really long year, I really needed that mental reset. I made a risk-on game plan. Let's take you guys back to the Bitcoin chart. My game plan here was, I'm going to bet on Bitcoin at the weekly trend if it's given, right? If the weekly trend is given on Bitcoin, I'm going to take this trade, right? We got a big dip into this weekly trend. If I come to the 4-hour here, we're going to quickly look at it before moving on so we can all kind of get on the same page. My game plan was, if we break this 4-hour downtrend after tagging the weekly, I want to be risk on, right? And that's exactly what we did. I took some opportunities to pick up some spot here at the weekly. We flipped the yearly open. We started crabbing above it. I'm going to tell you from experience, this was very hard to buy into. This was a lot of uncertainty. It felt like range high. It felt like it didn't break out. It felt like broken market structure. It felt like you're buying into a complacency shoulder. It felt really difficult to allocate in this position, which I kind of just slowly did over the course of a few days and a few weeks, with my invalidation being super wide. I said, look, if I'm re-exposing myself to the market here, I'm going to give myself a little wiggle room, and I'll get into kind of later in the video how I manage these things. But that was the game plan going into the year, was build this risk on plan and look for key trades confluent with Bitcoin coming down to the weekly. So some of the spot pickups that you guys see on your screen here was Doge, Near, and APT. I'll show you one of them quickly. If I do this for every single thing, this video is going to be hours long. But hopefully, if you guys are interested, you guys can just kind of do this on your own chart, with the time frames and stuff. So Doge was right here. It was crabbing on the weekly trend. It was just going sideways. It looked like it was an accumulation range to me. Bitcoin looked strong. So I wanted to take a bet on Doge, right? So I bought some Doge, same thing with Near, same thing with APT. Those were my plans of big spot pickups during that time. I had bags from before. You guys can see on your screen, like ALF, SMH, AKT, Say, Prime, Ondo, that I bought at like launch a couple weeks earlier. A lot of this kind of stuff, right? So I had a lot of exposure. I took some chips off the table to end 2023, and I was able to re-risk at the right time. So my game plan going into this year was really solid. High time frame reaccumulation, stuff like Dogecoin, crabbing around the weekly for a while, giving me really strong invalidations. I had bags that I really liked, but as you guys can see from this Q1 thing, I had a lot of bags. This isn't even all of them. This is just, some of them. I think at a certain point I had 15 to 20 coins in my portfolio, each with a different thesis, each with a different target, each with a different, game plan, etc. And I nailed a lot of them, right? Some of this I could say is skill, preparation, opportunity, attacking the moment. A lot of this is I'm getting granted a market that's just going nutty, right? So as you guys can see in the blue box and the blue rectangle, Bitcoin started going nuts. It went from 40K to 60K. A lot of people, myself included, were in disbelief. I didn't believe that Bitcoin's going to go to new all-time highs in a few weeks. Lo and behold, that's what we got. So some people will call this lucky. I'm a firm believer that luck is what happens. It's a trite saying, but luck is what happens when preparation meets opportunity. You prepare yourself for the right moments, and you're not going to say no if the market's going to give you more than what you asked for. So anyways, coming towards this top, I felt like was the start of my in the zone moment. It's the first time as a trader where I felt like I was firing on all cylinders. All the game plans, all the lessons, all the practice from 2023 were really hitting. One of my mission statements of 2024 was 2023 is the practice year and 2024 is the prove it year. So I felt like I had something to prove to myself. I'd seen a couple things from my system play out dozens and dozens of times, and it was time to trust those things to work out for me when I really needed them. So Bitcoin, let's go back to my normal screen here. Bitcoin losing the 4-hour trend after marking up for, insane multiples was a big moment for me to recognize that we're probably going to enter a little bit of a choppy regime, right? So the combination of failing to hold above this swing point right here, dropping back below, losing the 4-hour trend, holding the 4-hour trend as resistance. That was a key point for me to say I'm risking off in this market, and I sold almost all my bags, the SMH, the AKT, all the bags that you see there. I took plenty of profits on Ondo, wrong tab. All these things that you guys can see, Prime, Ondo, all these bags, Render, and I went really, really heavy cash. My game plan from here, once again, was that if the market's going to mark up like crazy, it's probably going to do so from the weekly trend. The same playbook that I did off the yearly open was what I was looking for once again on a correctionary environment. I wanted the ultimate discounts. And I said, when Bitcoin tags the weekly trend, let's go again. So, not many lessons learned from here. I think Q1 was a strong kind of amalgamation of so many lessons learned in 2023, me clearing my mind, because Q4 2023, I felt like I was in a bad place mentally. I really felt like I was coming down hard on myself. I was quote unquote underperforming the masses. That really got to my head. I'd made some missteps as far as some trades between Ethereum and Solana. I'd made some missteps between not buying TIA. So all these things were weighing on me, and it was really good that I got this mental reset and started to really trust myself and my game plan again. And Q1 was the kind of start of all things firing. Let me just focus on myself. All I'm trying to do is beat the Q4 version of me, the Q4 23 version. I'm not worried about X person. I'm not worried about Y person. I'm not worried about their performance, their gains, their trades. I'm focused simply on myself. And all I got to do is execute on my game plans. And that was what occurred in Q1. So I really have nothing to kind of extract from Q1. It was just, for me, it was a really, really good quarter. And some notes here I won't even go through because, like I said, this video is going to be too long if I do. Moving on to Q2. Like I mentioned, Q2, my game plan going into this quarter was simply I'm going to rebuy bags once Bitcoin tags the weekly trend, right? That was really what I wanted to do. And when we got these moments here in early April, I really, really, really wanted to risk on. I knew that Bitcoin could make a drive lower, but I'd seen some of the bags that I'd sold, like Pepe, like Render, like Ondo, Solana, Prime. I'd seen these bags come into the weekly trend. So whereas Bitcoin wasn't there, the altcoins were. And I'll just quickly show you, like Solana dumped into the weekly, Confluence with prior highs, right? Where's another coin that I can show you real quick? Let's do Pepe, right? Confluence of the weekly trend and prior all-time high, right? Prior all-time high weekly trend. I have to take that opportunity. I have to fight the fear, have to fight the uncertainty, and understand that my system is built for a reason, and I need to trust my system in these times. I cannot trust the market. I cannot trust what people are saying. I have to trust myself, and my thoughts matter more than anyone else. And my invalidations are clear, and if I give money back, I know where I'm wrong. I have to execute on these plans. So that's exactly what I did. I front ran my own plans as far as Bitcoin tagging the weekly, and I picked up a bunch of spot. The core differences in Q2 is I did not allow myself to pick up 15 bags again. I focused on these core 5, and I sized into them. This is where one of those, key lessons or goals for 2024 came in, is that, can I make more money, or can I scale with higher conviction trades in size, right? Less steps, less trades, more confidence, more conviction, and understanding the outcomes, understanding where I'm wrong, and really sizing into these plays, right? So I'm not looking to make 40 moves. I'm really looking to concentrate and pick up that free money on the floor when it's there. So that's what I did. And, the simple game plans, once again, right? I had drawn out plans here on Bitcoin. I said, if Bitcoin trades above these point of breakdowns, which is kind of like this, range high that I marked out here, it's more or less right here, right? If Bitcoin trades above range high with a spot bid, I'm going to hold on to these positions. If Bitcoin fails to do so, I'm going to cut the positions, right? I had the confluence of the daily trend. It was coming up in here. We were not getting a spot bid above these highs. We started losing the daily trend. For me, anything that I did not TP on those Pepe, Ondo, Render, Solana trades, etc., this was a time for me to close those positions out, and I pretty much nailed it, right? So I bought the bottom of those alts. I sold near the top. I had the game plans going in. I didn't have to lever anything up. All these trades were on spot. That was good enough for me. That got me the size that I wanted for these trades. As you guys can see here, I didn't move it back and forth. Here's the Bitcoin picture, right? Buying at the weekly. This is where I front ran. My aim was, if we break this kind of pointer breakdown right here where we lost a 4-hour trend with a spot bid, I will be max exposed to the upside, right? I've positioned myself in the point of maximum opportunity, and now I allow the market to give me maximum opportunity if it's there, and I have game plans of, if I'm wrong, this is where I'm wrong, right? So I'm wrong because we were not getting a spot bid here, and I'm wrong because we lost the daily trend. That was an opportunity for me to remove all the risk from the table, the excessive risk from the table, right? So as you guys can see here, this is the cleanest quarter, right? I can go into all these trades. I'm not going to. It's going to make the video too long. I think the lessons and reviews are more important, but it was easily the cleanest quarter of my career. I felt like I was firing on all cylinders. I felt like I was in the zone. I felt like I had made it as a trader. I can trust myself. I know exactly what I'm doing. All the hard work is paying off. All of these things were just clicking for me. I had felt a sense of pride, a sense of euphoria that I'd never felt before. And what you guys can see here is the next thing is ego maxing. I was 100% ego maxing. My ego was through the roof. I felt like, I'm the best. And this is around the time where, people that I respect, I've talked about this in last year's review, which was Trader Magus, who was talking to me around this time and saying, look, I want you to join Paragon as an educator and as an analyst. So it was kind of more vindication that, I am proving myself as not only a trader, but an educator, someone who can convey thoughts in a, coherent manner so people can learn. But it was a lot all at one time, right? My ego was through the roof. So from here, going into Q3, I would say was kind of like an emotional hangover, right? The wisest thing I did going into Q3 was able to self-reflect and understand that I am way too far from my emotional baseline. What I mean by that is day to day you wake up, sometimes you're excessively happy, sometimes you're miserable, but you have a median or average mood that caters to you. That's who you are. You have an average mood. Some people are naturally much happier. Sometimes some people are naturally much more miserable. Each person has their baseline. I was really far removed from my baseline. I was day after day way too happy, way too euphoric, and I understood that this is a moment where I can clearly fuck up. And this was never a moment that I'd experienced before. Typically, I understood that when I'm miserable and I'm sad and I've made multiple mistakes in a row, this is a moment for me to not trade because I'm not in the right mindset. This was that in reverse. So I gave myself plenty of time and opportunity to come back to the baseline. I basically said, look, altcoins are getting destroyed, weekly trends are being lost, daily trends are being lost. I don't need to action anything. I can give this time. I can give myself time to recalibrate, to also get in touch with the new portfolio balance, because I'm now going to be trading bigger and bigger numbers, and I don't want to give those numbers back. So let's give myself time, right? So what I did during Q3 was start intraday trading. I took a much smaller account, much smaller position sizes, and traded a time frame that probably none of you guys that know me are used to me talking about or trading, right? I started trading minute charts. I started trading mean reversion on the minute charts. I started trading with a little bit more order flow ideology. And all of this was just in an effort to keep myself busy, keep myself engaged, keep myself learning and growing without kind of torching some of the gains that I had made, right? So it was a learning opportunity. Continue learning, continue pushing yourself forward. And even though you're not making monumental gains, just pick up another skill set. So moving on from that, let's see, take a look at what I said here. Yeah, took time to recalibrate to a new capital base. Perps needed to size bigger proportion of capital holdings, hard to scale, right? So what I mean by this is my typical perp trading time frame is about the 1 hour, the 4 hour charts, right? Those are what I trade the most, typically the 4 hour charts. In order to make those trades meaningful as opposed to my normal capital base, I had to push those position sizes. I had to push those position sizes out of my comfort zone, and I was unwilling to do so at the moment. I understood that, my emotions are too far skewed. I don't want to do this. This is pretty much why I went to the intraday trading, because I said that you wouldn't be sizing big anyways when you're learning something new. So might as well, move on to something else instead of trying to push yourself out of your comfort zone immediately after such a big win. So enjoying new sleep work routine. I took my foot off the gas. I relaxed a little bit. I spent a month in Europe. I didn't fully clock out mentally, but it was a good reset, right? Moving on to Q4, right? I think one of my biggest highlights was Q3 going into Q4. I'm going to take you guys back to the chart quickly here. Something that I learned along the way was when to fade crowds, right? I think a lot of people look to fade crowds every day, every week on the 4 hour charts, on the 1 hour charts. Everything is a fade. Everything is fade sentiment. This guy's bullish. This guy's bearish. I'm going to do this. Let me fade. Let me be this, right? There's key moments where you do that. And for me, that, I've developed for myself, I'm not going to talk about it in this video, but I have threads on Twitter about this, which is the only time that I want to fade crowds is when there's a strong divergence in the confidence of the direction and the momentum, right? So we had already been crabbing now for 6 months, right? We had a big capitulation event with, I would call it a black swan, maybe not. It's, classically a black swan, but something certainly I didn't see coming, wiped out the market, hurt really bad. But I looked at this about a month later and I said, a couple weeks later, and I said, well, why aren't we breaking down? If we're so bearish, if we're so goddamn bearish, if things were going to zero, why are altcoins going sideways, right? Over the last 4 months, why are altcoins just doing this? Why are they just going sideways? Why is Bitcoin not breaking down? Why are we not getting 40K? Everyone's calling for 40K. We're not doing that. So this was a spark or a moment for me saying, there's a divergence in the confidence of the direction and what's actually happening. The momentum for the bears is waning. This was, I could say right here, this was the interest of being bull curious. This was the strong interest in being bull curious. And this is where I actually started allocating to the market heavily. Here and here. These are the two moments that I allocated very, very heavy to the market. This one right here was me basically going all in. And that was the only time this year that I really faded the consensus narrative. The consensus narrative was much, much lower. We're going to fill our bags here. We're going to buy this. We're going to do that. And I said, nope, I'm going to put myself in an uncomfortable position and I'm going to allocate in these locations. And I'm very happy that I did so. And one of the bonuses of allocating when things are very uncomfortable is you're given the opportunity to kind of wait and see in uncertainty, right? If you allocate in a healthy place, when you get to these moments of, is the election sell the news? Is it this? Is it that? Should I de-risk? You have a little bit of a luxury to say, okay, I'll know I'm wrong if this happens, right? And you don't need to allocate here. You don't need to remove risk here. You say, okay, I'll just do what the chart says because I've positioned in a location that no one else was willing to do so, right? So you put yourself in a position of advantage over other market participants. And like I said, sometimes you're catered to upside that you didn't expect, right? like here, right? If you position these locations, you're catered to upside you didn't expect. And sometimes you position these locations and the market doesn't give you what you want, right? So it's both of these things, right? And this is one of those moments where you're positioned in the right location and the market gives you what you want. Anyways, that's pretty much going to do it by quarter. Actually, no, I didn't even do Q4 yet. Let's continue this. So one of my best trades in Q4 was I was exposed to a meme coin called Apu. Apu had done about a 6x from my entry, and I full swapped into Pepe. And the reason I did so is because, I use something that not a lot of people use, which is pair charts, which I'll talk about a little bit here. I basically saw that my highest conviction play as far as a spot holding this cycle is Pepe. For those of you guys that know me, that's my strongest conviction. I believe Pepe is going to flip SHIB. That was the fundamental trade that I took and put on. I caught this trade on Apu, right? Separate than Pepe, separate than anything. I bought Apu. It went up 6x. I recognized that on the pair chart, it is drastically outperformed Pepe over a 20-day span. It's come to the valuation of prior all-time highs. It looked to me like I extracted a lot of value on this trade, and I can continue holding chips in Apu, or I can rotate that money back into Pepe. And I'd taken my Pepe slowlings, my reaccumulation, a little bit slow. And when we got up to here, I got very kind of curious of like, let me rotate this back into Pepe. And I did so the day of the election. Basically, when I felt underexposed a little bit, I said, my highest conviction is Pepe. It looks like Trump is winning the election. It looks like we're breaking out. It looks like, things can go crazy. I took that opportunity to basically full stack my Apu into Pepe on November 6th, right? And, Apu since November 6th, I don't think performed that well, right? Somewhere in here. And Pepe since November 6th performed phenomenally, which is pretty much what you guys can see from the pair charts, right? So, very good trade for me. That was my trade of the quarter. That was my rotation of the quarter. That was the best decision that I made this quarter. So definitely a highlight. A lot of underperformance after Pepe, right? Nailing this trade, full stack, full confidence, tons and tons of size, recognizing that I need to sell the top on the Coinbase listing, Upbit listing, Robinhood listing, traded a little bit of this range, sold before this, devastating a breakdown, bought the bottom, but my management of Pepe has been fantastic, but I was a little bit unwilling to explore other things happening in the market, right? Other things were happening, hyper liquid, and other things were going on in the markets. I was not exposing myself to that. So there was a lot of underperformance after this trade. I basically just been trading around my baseline kind of since then. I haven't really made any monumental new all-time high pushes. This is all the way back in November, which, I'm recording this video in January. So over the last 2 months, I am sitting at or close to portfolio all-time highs, but the past few months for me have not been these monstrous head over heels moves, and there I'll talk about that a little bit later in the video of why I made those decisions. But now coming back to this Q4 round trip on FWOG, right? That was a coin that I picked up very, very early. I full kind of round tripped that, almost back to entry, drank the Kool-Aid a little bit too much when it came to FWOG, wanted to take excessive risk, and I'll talk about that in a second of why I did that. My game plan going into Q4 was memes are going to be hot off the rip, and then we'll rotate into tech. That was my absolute game plan. When push came to shove, I did not execute on that whatsoever. I really allocated to memes off the bottom. I was correct that they were the strongest horses off the lows. But when I felt like it was time for me to rotate, I was really, really unwilling to do so. The main reason was I did not do enough fundamental research into tech coins over the summer. I got a little complacent over the summer. I didn't do enough fundamental research. I didn't build conviction in these coins enough for me to actually rotate into them. When Hyperliquid dropped in November, I wanted to take it as a trade. I kind of put it off until the morning. I woke up, the coin is up, a couple X's, and I never got in that trade, right? So that was a very strong reason for my underperformance after Pepe was lack of game plan, and then lack of execution based on that game plan. The game plan wasn't fleshed out. It was just built. Memes to tech. The tech-based memes or the tech-based plans were not made. So there was no rotational execution. So although my plans were good, I didn't execute on them. There's nothing to kind of be proud about there, right? Maybe a little bit of complacency, right? So that comes to Hyperliquid Fark. I have Farcoin here, but I did buy it. But it was just a little bit of unwillingness to participate in the rotations, unwillingness to extract more risk, unwillingness to take more risk, kind of just being a little bit more comfort, staying in my comfort zone, staying in my shell, and wanting to mentally like protect these gains versus being like, let me put my foot on the gas. Here's another opportunity for me to extract value on this agent meta, AI agent meta, hyperliquid meta, all these other new fun, exciting things going on in the market. And I kind of just stayed in my lane and I said, you guys have fun. I'm not going to do it. Very, very big down moment, kind of low light of the year that I was unwilling to do that for the reasons I mentioned. Lack of game plan, unwillingness to participate, maybe a little bit of complacency, probably a little egotistical at this moment too, and kind of just feeling myself and not wanting to kind of feel like I have to do anything. And the biggest part right here in Q4 was Bitcoin dominance baiting us, right? This is a big moment for I'll never forget for the rest of my life. One of the things that I'm very quick with doing is full stack kind of de-risking my positional trades. And I left a lot of meat on the bone because this Bitcoin dominance uptrend that has carried us from the bear market bottom, was traded below. We had a market structure break. We had a trend loss. We had a close under the weekly trend. We had a deviation of an over-under of a very key level. We had a monthly engulfing bearish candle on the monthly, right? So a lot of these things pointed towards this possibly and potentially a Bitcoin dominance top. It was nothing of the sort, right? Altcoins got absolutely demolished, and this led to some of my decision making when it came to things like FWOG, right? I didn't take profits on that because I really felt like after 2 years of playing the market the right way and understanding we're going to get a risk curve rotation back to Bitcoin, risk curve rotation, reset back to Bitcoin. This felt like a moment that potentially we could be getting more flows into alts. It didn't play out the way that I imagined, but I do not have regrets on the decision that I made. Even though I gave some money back to the market, I do not have regrets whatsoever about the decision that I made because had it played out the other way, right? And had I been underexposed, I would be more upset today versus taking the trigger that was there or taking the market at face value, and what am I trying to say here? Executing on basically the chips that were handed to me, right? If I got pocket aces and I didn't bet, I'd feel really dumb about it. This felt like a moment where I got pocket aces and I lost, but I'm not upset about it. That's the trade that I was supposed to take. Yeah, and here's the last point, right? It all kind of comes together. Getting close to my imaginary number made me take less risk, right? I didn't want to rotate because I was getting so close to this fake imaginary number in my mind of, in this bull market, I'm going to make X amount of money. This is kind of like a dream goal. I didn't think I would get there, but as I'm getting closer and closer and closer, I'm more protective of the gains, and I'm kind of unwilling to do things that make me feel uncomfortable, right? Maybe that's complacency, maybe that's rational, maybe that's irrational. People have a lot of takes on this. The market doesn't care about you. The market doesn't care about what you want. They don't care about your imaginary number, but it affects your mentality 100%, right? And it's definitely affected mine and made me less willing to take rotational risks. So that was a big point of why I didn't size bigger into Fartcoin, right? I did buy some at 10 cents. It's trading above $1 right now. I don't know the exact price, but trading above $1. The hyperliquid trade, I really just didn't have confidence in hyperliquid. I didn't understand it because I did not do enough research. And I was just unwilling to kind of just throw chips at AI agents because I wanted to protect the capital. I didn't want to give any of it back, right? If I was going to give it back, it was going to be because of the Bitcoin dominance kind of shake out, fake out versus doing it because I'm seeking excessive risk. So that's a quarter by quarter basically breakdown of 2024. Now let's kind of go through the synopsis of everything I just said with the highlights and the lowlights, right? So let's start with the highlights. So highlight number one, high time frame execution, right? As you guys can see through Q1, Q2, Q3, Q4, I pretty much nailed the big pivot points in the year, right? I sold a lot of tops, I bought a lot of bottoms, I gave reasoning for each decision that I made in the moment. All of those decisions in the moment were very uncomfortable and difficult to make. You had to fade a lot of people, but like I said, if you are going to fade the crowd, it is only going to be a few times a year. You do not do that every single week. So I'm very happy with my high time frame execution, my risk on and risk off. There was one time this year where I didn't fully risk off, or excuse me, last year now because I'm recording in 2025. And that was because of the Bitcoin dominance breakdown. And I have no regrets on that decision. I got it wrong, but I would take that trade 10 out of 10 times, right? That's something that I want to bet on again, right? Just following my system as a guy that trades price action and trends. That was a moment that I needed to take that trade. So I have no regrets on that. Like I've mentioned here, momentum loss and overconfidence divergences, something that I learned very strongly in 2023 and applied to the market very strongly in 2024 is you only want to fade the bears when they're getting overconfident and getting no momentum. You only want to fade the bulls when they're getting overconfident, getting no momentum, right? Another highlight was, obviously I talked a lot about this, don't need to go into it again, but was the Q1 to Q2 hot streak, basically selling the top, buying the bottom, and then selling the next top. That was a insane compounding effect for my portfolio. Whereas a lot of people had topped their portfolios in March and were bleeding capital into June, I had basically doubled my net worth, a little bit more than doubled my net worth from March to June, right? So extremely euphoric, kind of ego maxing. I told you guys about that I had to take some time away. Understood my emotional swing point, took time to adjust. I think that's a very big highlight for me. It has nothing to do with trading, but just the decision to say, I'm not in the right mindset to be trading. I can see myself. I'm egotistical. I'm showboating. I'm speaking a little too overconfident. This is a moment where the market can really humble me, and I need to take a step back, take some time away, and recalibrate to back to my emotional baseline. Upped my risk tolerance. That was my goal going into 2024, as I need to up my risk tolerance. I need to improve on my sizing. I need to take bigger bets when they're there. I'm very happy with the risk tolerance that I improved on in 2024. Overcoming imposter syndrome. This is something we haven't talked about yet, so I'll spend some time here. Overcoming imposter syndrome. This was something that was there for me in 2023. You know, I was feeling the need to prove my skill set to people. I was feeling the need to have people see that I'm good at this, right? I'm the new kid on the block. I wasn't here last cycle, right? Who is this guy? Why does he have 5,000 followers? Why does he have 10,000 followers, right? Is he a LARP or is he real? And a lot of my mindset, because we're socially trading, because I'm here on YouTube, because I'm posting on Twitter, because I have a Discord, because I'm part of Paragon, all of these things come to my mind is that I need to continue proving to people that I'm good as shit. And that can sometimes weigh on your decision making, right? That can sometimes, confuse you. Am I actually as good as I need to be? Do I need to prove this to people? Or maybe I'm not that good, right? Maybe people are so much better. They talk this, they say they hit this rotation. Maybe I'm just shit. Maybe I'm not that good, right? All these things, you're just kind of you're just measuring yourself against your opponents. You're measuring yourself against this person and that person and this person. And do I need to show my entry? Do I need to show my P&L curve? Do I need to post this P&L card, right? And I feel like I overcame a lot of that because I stopped feeling like I needed to prove things to people. I started getting more comfortable in my own skin. I had proven to myself now for 2 years, 2023 was a good year, 2024 was a good year, that I can manage this market not only when the market goes up, but when it goes sideways. In 2024, there's an actual stat. In 2024, Bitcoin only uptrended for 51 days. For 300 days, it basically was ranging. It was going sideways. It was crabbing for 300 out of the 365 days, pretty much, of last year. So you're not getting granted this just overwhelming bull market. You're getting a lot of crab and competing and proving yourself in those moments year after year, for me, gave me enough confidence to just not give a singular fuck about what anyone thinks. And what I basically do now on Twitter is just shitpost, right? I basically just have fun. I use it as a release. I use it because I'm always stressed, always in a trade, always thinking about a trade, always thinking about the next move, the next market move. What if I'm right? What if I'm wrong? What are the outcomes? Will I make money? Will I lose money? Keep me up at night. There's this new event. There's this thing to think about. There's the election to think about. Now there's this Trump coin, Melania coin. Like, you have to think about these things all the time. So why use the social aspect of trading as another form of stress? Why not use it as a release, right? So that's something that I'm very happy about, and that moves on to the next thing. I'm having more fun. I've improved my sleep. I've improved my health. I don't feel like I need to prove things to any people. This is a very big highlight of 2024 where I feel like I grew as a trader. Now this is a little bit confusing coming on to the next one. I stopped working as hard. And what I mean by that is I put less hours in. In 2023, I was putting in all the hours in the day, right? In 2024, I relax more. I play video games again. I talk to my friends again. I watch TV shows again, right? I work less hard than I did before, but I'm happier because the performance is, the performance is improving, right? I still feel like I'm growing as a trader. And that was the mission statement coming into 2024. How do I work smarter to make that money instead of working harder, instead of working more hours? So I've taken hours off the table. I've improved my sleep. I'm happier. I'm healthier. I gave up alcohol in 2024, so I'm sober for a year now. Big vice for me. It's a little confusing because throughout my life, I've always felt like the more hours you put in, the better you're being. And if you take time off, you're wasting your life and you're wasting time. But I found that it's very necessary for me, just as far as my day-to-day goes, to have that time off. Another positive is I improved my low time frame trading. I found a repeatable edge. I'm not going to cover that in this video, but I spent those couple months in Q3 just trading low time frames, and I'm very happy with the improvement there. I'm looking forward to further exploring that in 2025. I recognize that being a portfolio manager is much more important than being an active 24/7 trader. Being a trader is like a day job. It's like a wage. It's a means to bring in salary. It's a means to bring in consistent income. Trading, or calling yourself a trader, just means that you can extract value from the market on a day-to-day basis. Any single day you can find something to extract value on. You can execute on it. That's a skill set. That's a job. That's an income. People don't get wealthy off an income. A doctor does not get wealthy off an income. You still got to pay taxes. You got expenses, cost of living. You don't get wealthy off an income. You get wealthy by investing your money. We're doing the same thing here in crypto. Trading is your income. Investing, positional trading, swing trading, these kind of moves amplify your capital. And that's really what we're all here to do. Okay, that's going to do it for the highlights. Let's move on to the lowlights. This will probably be more educational than anything else we've done so far. I think like I said at the top of the video, I learn more from my mistakes than I do from my successes. So let's get into it. Complacency after success, unwilling to take risk. I think this is a low light. Some people can spin this and saying, maybe Doc, you did the right thing and you took your foot off the gas, you protected your gains, but I feel like there's no growth in that. The maximum growth in anything you do is putting yourself in an uncomfortable position and overcoming that adversity. This is a position that I took twice last year where I had a successful run and I took my foot off the gas because I was unwilling to take risk. I did that in Q3, right? And I did that again in Q4, right? I took 2 times. Or Q2, excuse me. I did it in Q2 after the run up, and then I did it again in Q4. Basically said, I'm comfortable and happy. I made a bunch of money. I'm taking my foot off the gas. I'm not going to rotate. I'm not going to take a risk here. I'm not going to buy this. I'm chilling. And I think there's a good part to that, but I think really I can grow from this. I think that's a low light. I think it's something that I can improve on. I think I can make those rotations. I think I can get my head out of my ass when I do well. I think I can calm my ego a little bit quicker when I do well. I think I can go back to the drawing board. I think I can do better. So that's something I really want to work on going forward. I really am taking that as a low light, that I'm unwilling to take risk, right? It all just comes back to my inherent nature of unwilling to take risk. Slow to process new information and new coins. Even though that I had missed the hyper liquid farming period of getting points, I still could have seen that this coin is trading well. It's going up from $2 to $3 to $4 to $5, $6, $7. Slow to process that information, slow to submit to that narrative, definitely a mid-curve moment, and once again, slow to adjust and submit to the AI agent narrative. When GOAT came out, I didn't like it. I mid-curved it. When Fartcoin came out, I got some exposure. Then there's a lot of other AI agents that absolutely popped off. Virtuals as like kind of the base layer of all of this was something I faded. AIXBT, I didn't get into it till 30 cents, 20 cents was when I bought AIXBT. So there's a lot of trades out there that I could have submitted to quicker. I'm slow to process the new information. A new meta emerges that I don't understand, and I'm not willing to just put chips on the table. It really takes me a while to be like, what am I actually buying? What is this thing? And that's something that I think I can improve on if I dedicate time to it. So if I basically say, I'm spending 10 hours a day looking at charts. No, let's not do that. Let's spend 10 hours today actually learning about these coins versus having your friends drip feed you a sentence or two every other day, right? So definitely something I need to improve on. I avoided the trenches for most of the year. I didn't do the Solana shit coining. I didn't do the low cap meme coining. I didn't hit many. I didn't hit 100x. I didn't hit any low caps. Something that I did in the past. I did that in 2023. I went into the trenches. I did not do that in 2024. Again, that's part of my inherent risk intolerance, you can call it, risk adversity, right? So definitely something that I would consider a low light. There's a lot of money that I left on the table. Again, being too satisfied in the things that I do and not pushing my foot on the gas. You guys can see how these are all coming together. Inherent weaknesses show up in many different forms. For me, again, avoiding new coins, unwilling to take risk, unwilling to rotate, didn't go in the trenches. Moving on, and this is the chart that you guys see in the background today. Drank the Kool-Aid a little bit on FWOG. This is my biggest round trip of my career. Now I'm still above water on FWOG, but I round tripped the shit out of this. I round tripped basically 6-7x or something. I did cut on the first 4-hour breakdown, and then I bought it back a little bit too soon at the daily. So I did lower my cost basis in that kind of in that move, right? Selling high and buying a little bit lower, but nonetheless, those rebuys lower are still down 50%. So nonetheless, it's pretty much a full round trip, right? Not a full round trip, but a round trip. And the reason being is I abandoned my system in this moment to bet on the kind of meme, right? This went hand in hand with Bitcoin dominance breaking down and me betting on that. This went hand in hand and thinking this could be the moment of the cycle where we can go above and beyond my expectations. We can break the meta of risk on, risk off with Bitcoin dominance. We can really go nutty here. We don't need to retrace 80%. We can retrace 50%. That's good enough, right? I really believe that 50% on this would have been enough, but I was definitely wrong. From this experience, I'm really happy it happened. I'm really happy that I gave this money back to the market. I'm really happy that, the money that I saw on the unrealized P&L basically went back to the market and evaporated because I get to learn from it. And the lesson that I'm taking away from here is kind of just don't drink the Kool-Aid that much, right? The chart matters more than anything else. I still love this coin. I'm still betting on it. I'm still holding it. And in fact, I don't care if this goes to zero, right? I'm just going to hold it. That was my mission statement from day one, right? I believed that when I bought this coin the first time, I said, I'm buying X amount. If it goes to zero, it goes to zero. If it goes up, I'm selling when it gets to these targets. It didn't get to my targets. I used the system a little bit to de-risk on 4-hour trend loss. I used the system to rebuy daily trend tag. But when daily trend was lost, I didn't de-risk, right? And that's the biggest moment and lesson there is no matter how much conviction you have in a coin, that you got to take the signals. And I think this is the only time legitimately in my entire career that this has happened to me. I've never had this happen to me before. And I'm kind of glad that it did because now I get to learn from it and I get to grow from it. And I probably will not make this mistake again in the future. Big low light right there. Unwilling to even try trading on Hyperliquid. So many of my genius friends told me to trade on Hyperliquid. So many, like countless. I never did it. I have access to Bybit. I have access to Woo. I have access to other exchanges. All my needs are met. There's no need for me to trade on Hyperliquid. I didn't get it. I didn't understand it. I didn't care about points. I didn't care about farming. I thought I was late to the farming. And I missed $1 million pretty much. Probably more. Probably, with the perps that I trade, the size, the volume, probably would have been a 7-figure airdrop. Sucks, but it is what it is. Definitely a big low light. Rotating. I've talked about this numerous times and I can kind of brush over it that I don't rotate well, right? The biggest rotational error that I made this year was understanding that memes would rotate to tech and not rotating memes to tech. Big fumble, big low light right there. Ego prevents me from copy trading my proven killer friends in the trenches. I have a lot of killer friends. They crush the trenches. They even send me tickers and I don't buy them because I look at it as free money. Like, I don't earn this. My friend told me to buy it, right? And there's some part of me, I don't know what it is. It's just a character flaw that has this egotistical moment that I'm not allowed to make money if my friends give it to me. I don't want handouts. I want to earn it. Because there's an egotistical part that I'm always gonna have to feel like that money came from someone else. That they have this kind of power over me. They handed me this thing. They're the alpha male. I don't know what it is, and I'm just being completely open with you. I know at least 1,000 people are going to watch this video, and I have no shame in admitting that. That's just who I am, and that's probably a character flaw. It's a low light. It's probably something I can get over. It's a stupid egotistical thing that I do, and I'm basically saying no to free money. A lot of the times, right? I was handed Fartcoin at like sub $1 million market cap. It's trading well over $1 billion. A lot of my friends hit that 500x, 1000x on Fartcoin. I was just like, I don't know. They were shilling me on it hard back then, and I didn't take that trade. So, I bought Fartcoin at $100 million market cap after fading at $1 million. So it's definitely a low light. Low effort in summer swing trading could have crushed the range. Yeah, I could have definitely traded the range. I think that I overcame some of that burden of the what do you call it, the ego and the inflated emotions and stuff. I think in the later stages here, I could have started trading. I could have started buying here. I could have started selling towards range high. I could have bought this capitulation. Even though I was in Europe, I still had access to one of my perp accounts. I could have longed here. I could have played these ranges. Excuse me. I didn't start playing this range until here. I had a really nice account run up in September on one of my perp accounts. Really nice. But I avoided a lot of this, and I think I could have done a lot better. That's a little bit of hindsight, but the low light here is not the hindsight. The low light here is the effort. The low effort that I put in, I could have put in a little bit more effort. I was fine just scalping. I was fine just intraday trading. I could have taken some swing trades. I saw them there. I just didn't take them. So I'm blaming that on effort more than anything else, that I put in low effort and I could have put in more effort. This is kind of just a combination of things. Is unwilling to lose money leads me to do nothing, which leads to no growth, right? If I'm unwilling to lose money, it just paralyzes me, makes me make no decisions. If I make no decisions, I do nothing. If I do nothing, I have no opportunity to learn anything. So in the future, right, I really want to force myself to be in the trenches. I really want to force myself to maybe copy trade my friends. I really want to force myself to trade on Hyperliquid. I really want to force myself to put myself out of my comfort zone, right? So and set some money aside, right? Whether it's 20K, whatever it is, just put some money aside. If I lose it, I lose it, but I learn something from it. And think of it this way, right? If you lose that money, you're not actually losing it. You're just paying tuition to learn something. I'm paying money to learn a course. I'm paying money to learn a skill set. I'm paying money to learn something. Big focus there going into 2025. I've almost gotten too selective on my trades. I think this is an overcorrection from early impatient days. Early in my days, I would overtrade. I would take too many trades. I'd trade around my entries. I'd take trades that I wasn't even planning on taking. I would, miss a trade, retrade something the next hour, right? Nowadays, I'm almost too selective. I'm almost too patient. I'm almost too unwilling to take trades. I kind of just look for S-tier setups. And if I don't get S-tier setups, I kind of just don't trade, right? And I think, again, that's preventing me from growing and preventing me from learning. I don't know if that's a low light. I don't know if that's a highlight. I put it in the low light section. I still haven't wrapped my head around this, if this is a good thing or a bad thing. All I know is that the more you trade, the more you learn. And if I'm removing reps, if I'm removing, basically call it gym time, if I'm lifting less weights, I'm going to decay, right? And I think that even though I nail those S-tier setups, I need to do something with my time. So I think the hole, I'm going to plug that hole by just trading more intraday, which will keep me up to date, keep more volume in the books, keep me trading, keep me engaged, and maybe I can grow that skill set to be one that rivals my medium time frame skill set. My medium time frame skill set, high time frame skill set, I would say are pretty good. My low time frame skill set is average, right? It's not great. It's just average, right? And I'd like to get better there. A bit too obsessed with my P&L curve, too focused on risk management. Again, you guys can see that I'm just repeating the same things again and again and again. There's something to be said about a good-looking P&L curve, right? I think if any of you guys have ever had one, you kind of just don't want to see that fuck up. You kind of take a lot of pride in looking at it. no one can see it but you unless you send it to someone else. But sometimes you can get in your own head. So I'd like to avoid doing that. I think one of the things I'm going to do over the next few weeks is absolutely nuke that account. Basically, not on purpose, just remove the money from that account. So just leave that P&L curve in the past and start fresh, right? Because looking at it makes me unwilling to make mistakes, because I'm like, some part of me likes the way it looks more than the money itself. It sounds so stupid, but again, I'm here, I'm an open book, and I'm sharing all the weird and quirky things that come through my mind. So I'm a bit too obsessed with the way that it looks, and I'm a bit too concerned about ruining it, which changes the way I trade and changes some of the decisions I make. My performance is always hot out the gate, but stalls as I become more protective rather than press the gas. I did the same thing in Q4 of 2023. The same thing, very hot out the gate, stalled. Did the same thing in Q4 2024, very hot out of the gate and stalled, to be protective rather than going down the risk curve. ETH underperformance. I haven't talked about this at all. So some of those banger trades that I hit this summer. Right, let's go to TradingView quickly. Some of those banger trades that I hit this summer, like Ondo and Pepe, I TP'd 80% of these trades into USDT, but I traded some of that into ETH as well. And the reason being was just I believed that the ETH ETF could have its own narrative and its own rally. So I actually I rotated some down here and I rotated some up here. And that did nothing, right? All it did is get bodied. So this was one of the worst kind of portfolio decisions that I made this year, was taking some of those gains and putting it in ETH, and ETH absolutely got decimated by Bitcoin. ETH got decimated by Solana. ETH got decimated by the market. Terrible trade to take, terrible decision to have. Definitely belongs in the lowlights section. The idea was there. The idea was ETH would get inflows. I could have adjusted a little bit quicker. I could have removed that a little bit quicker, but I got a little bit comfortable. I got a little bit lazy. I got a little bit complacent. It's ETH. It's okay. It's ETH. It's a major. It'll come back. Who cares? That's that complacency that I think would have reared its head had I traded actively in the summer. That was my mindset then. I was so in the clouds that it allowed me to just be like, okay, I'll just take a 30% drawdown on ETH. I don't care, right? Terrible mindset to be in. Definitely belongs in the lowlights. Let's move on from here. Next is needs improvement. Real quick, rotations. We talked about speed of processing information, willingness to participate in new things, more low time, high time frame dispersion. So I want to trade intraday for work-life balance. I want my intraday trading to get on par with my medium time frame trading, and I want to do less medium time frame trading. The reason I want to do this is medium time frame trading, such as 4-hour charts, forces me to sometimes be up at odd hours, forces me to sometimes have alerts go off at odd hours, and sometimes you just miss stuff. You're at the grocery store, alert goes off, right? Then you have to make these decisions of, do I leave limit orders? Do I need to go be active? Do I just drop what I'm doing and go look for trades? So for lifestyle purposes, I'd like to improve my low time frame trading so I could just dedicate X amount of hours per day to trading. If I hit some stuff, I hit some stuff. If I don't, I don't. But kind of regulated work hours. Things to improve on: fully separate high time frame positional trades from daily mental space. I'm really good on high time frame, but I spend too much hours of my day, too many brain cells per day thinking about it. I don't need to be thinking about my spot Pepe position on a day-to-day basis. I don't need to be thinking about my spot Solana position on a day-to-day basis. Unless I'm actively trading Pepe, unless I'm actively trading Solana, not much is going to change on a weekly chart every single day. Not much is going to change on even a daily chart every single day, right? So, I can keep an eye on these things, but I feel like I spend too much mental space looking at them because that's where the bulk of my money is. And I want to do a better job next year separating that. Pushing larger perp size again, right? This is what I mentioned in summer. Why did I not trade the medium time frame on perps? Why did I go to intraday trading? I got a little scared, a little nervous to size up again on perps. I'm hitting some levels now on the perp account where it becomes scary to push that much size on an intraday basis, on a day-to-day basis. For me personally, like being a risk adverse person, call me what you want to call me. That's just who I am. That's I'm at that size. So I'd like to continue exploring that and continue pushing that. learn FA. I've recognized in 2024 that a lot of the trades that my friends hit and had confidence in were due to fundamental analysis, right? Grass was a trade that I borrowed conviction from my friends. They were really bullish on it. I spent about a week learning about it before I pulled the trigger. And I pulled the trigger, got about a 5x in a couple days. Massive. But they hit that shit with size. They hit that shit with size because they were so convicted in that coin and so well understood how mispriced it was off the rip. And because I, really skimped on the fundamental analysis, I didn't size like them. I'm very happy about the trade that I had, but I didn't size like them. So learning fundamental analysis, paying more attention to fundamentals, definitely a goal for me. Balance between pressing the gas and being protective. We talked a lot about this. And here's the last one. Fuck leaving spot runners, right? This talks about, again, putting some money in ETH, rotating in ETH in summer, or, just anything, right? If I sell Pepe at a top and I'm highly convicted in a top, meaning 4-hour trend loss, right? After a parabolic move, 30% drop possible to the daily. Why am I selling 80%? What is preventing me from selling 100? Something for me to think about, contemplate about, and improve on. Even though I leave these tiny runners, why? All it's indicating to me is that I'm lacking confidence. That's all it's indicating to me, is that I lack confidence in my own decision making. There's a part of me that thinks that I could be wrong. There's a part of me that doesn't want to fully trust myself. So something I need to improve on as well. There's no need for me to leave spot runners. Okay, and that brings us to the last part of this video. If you guys are still with me an hour in, we're in the final stretch. Here we go. Let's get into it. So lessons learned from 2025. The game is about finding the best way to get from point A to point B. You can play the game any way you want. You can spot trade, you can positional trade, you can fundamentally trade, you can perp trade, you can intraday trade, you can do whatever you want. Something we've always known, but something that's more clear to me than ever, that the game that we're playing is built by a meta, and the meta will make the game easier. Sometimes the meta is Bitcoin is going to range for 8 months. Play that meta. Sometimes the meta is we're launching new shitcoins on Solana. Play that meta. Make the game easier for yourself. Take the easy route. Play the overpowered character in the video game. Don't think about, I need to stick with my guns. There's room to explore. Play the easy meta. And people will frown on you for doing X, Y, and Z because they don't do that, right? Someone may just be a perp trader and they may think I'm better than this guy because all I do is trade perps, even though they're underperforming you drastically on a year-over-year basis. I think there's a lot of people that do that. They think that all there is in markets is to sell highs and buy lows and buy a liquidity sweep and play from point A to point B and do this with 3% of their capital. And even though they're feeling really confident they nailed every move, they're massively underperforming other people that are just playing the meta. And identifying that the meta right now is a high time frame uptrend. We're accumulating, we're distributing, we're marking up, marking down. Nailing those moves with full confidence and size is going to outperform people. So yeah, always participate in the meta. Make the game easier for yourself. The game is about getting from point A to point B. There's no wrong way to play. Get from point A to point B. Take a motorcycle, take a car, take a bicycle, rollerblades, take a plane. It doesn't fucking matter. Take the easiest route available for you to get there, and don't care what anyone else says. Health and sleep improves performance. I learned this firsthand. Performance improved. My mental clarity came back to me. The stress levels went down. My palpitations went down. I deal with stress a lot better. Constant grind has diminishing returns. Nuking your health is not the way to make it. Maybe in spurts, maybe a 2-week spurt here, but if you do that all year, it's just recipe for disaster. Extreme toll on mental health to always be locked in. Definitely make time for yourself to lock out, to clock out, right? I didn't do that for Christmas, right? So last month I stayed locked in. I really wish I hadn't, because that led to a little bit of burnout during that period. The market was not that fruitful. Definitely could have taken my foot off the gas and relaxed a little bit in December. Full-time perp traders underperform uptrending markets. It is what it is. Some of you guys are going to be full-time perp traders. You're definitely underperforming an uptrending market. Your portfolio probably looks good. Your P&L probably looks good, but you're not 100xing your portfolio perp trading a market. You need spot exposure. It's a very tough lesson for people to learn. It's something that I learned in 2023 and something that was cemented for me in 2024. I don't know if this is a lesson learned for 2024, but it's something maybe I didn't include in 2023, so I'm putting it in here. Conviction is a double-edged sword, right? Conviction is what led me to hold Pepe for 100x. Conviction is always what prevented me from trading grass in this range. Conviction in this coin that I developed is what prevented me from trading full stack selling range highs, especially when we lose trends. Full stack selling when we lose trends here, right? And betting on this to be a breakout. So it led to me to give coins back. This is where I ended up closing the majority of the position. This is where I closed the rest of it. I know my entry is 65 cents. I know I still got about a 4x out of this. I did compound once, but I could have nailed this trade if I had a trader's mindset, right? That's what conviction will do. It'll prevent you from over trading and bet on the high time frame picture as long as the high time frame picture looks okay. But conviction will also give you the Pepe 100x. Conviction will also cause you to full round trip on FWOG. Conviction is a double-sided sword. You as a participant need to find the balance. You need to find the balance on what's going to make you happy. Basically tabulate the outcomes. And if it comes down to, I may round trip 80%, if you're unhappy with that, make that change. I may do this, I may do that, this may be the outcome, make that change. Do what's best for you, do what makes you happy. Calculate all these outcomes, come to a consensus, this makes me happy, I'm going to do it that way. Just recognize that, yeah, I learned for the first time ever, conviction has only been positive for me. 2 moments in 2024 between FWOG and grass, conviction was the other side of the sword. And both of these are okay. It's not like I lost a bunch of money. It's just a lesson that was learned. It's a very strong lesson. I think other people have learned this lesson before me. I may have actually be late to learning this lesson. Maybe I've been so fortunate in my conviction trades that I've never had to experience this. But nonetheless, I am very happy that I learned this because I think I'm going to make better decisions in the future. The more money you make, the more discipline required to take profits. The more capital you grow, the easier it is to scale. A 50% move on a $100 capital basis, $50 growth, probably won't make you that euphoric. A 50% move on a $1 million portfolio, a $500,000 gain, make you very euphoric. It's going to be a little bit harder to manage your emotions, a little bit harder to take profits, and I experienced that a little bit myself on this Pepe rally. So let's quickly look at Pepe. It was very, very hard for me to sell this, even though I knew Coinbase listing, Upbit listing, Robinhood listing, all in the same day, all in the exact same moment. I knew, my gut said it's topped for a little bit, but pulling the trigger took me a minute to do. It was very hard. So lesson learned from this year that I'd never experienced before. The more and more and more money you grow in a position, the harder it is to take profit. Didn't expect that to happen, but I learned it, and now I'm going to be seeking it. I'm going to look for that moment that my brain switches to that, right? And I'm going to kind of accelerate and be like, this is the moment. You've experienced this once before, right? So it's a big learning lesson for me. It takes time to adjust a new capital base and volatility. We talked about this. Emotional reset to baseline takes longer. The further you displace from it, we talked about this. The more euphoric you get, the longer it takes to come to baseline. The more depressed you are, the longer it takes to come back to baseline. There's no money in predicting forecasting for 99% of people, or I should say 99% of the time. If you get a prediction right, don't expect that it is repeatable. If you predict that something is going to happen on X date because of this, because of that, don't make that your entire personality. You're not Rain Man. You don't have the code. You don't have the Bible. You're not seeing through the matrix. I get caught up in this. A lot of people get caught up in this. You can get on a hot streak of having good hunches, but and following those hunches can be very fruitful. But if you make that your entire personality, I think you're setting yourself up for big failure. Right? Keep doing the small things repeatedly, and let someone else have the clout. Let them have the fame. Let them have the clout. Let them be the I called it guy. You don't need to be the I called it guy. You just need to do the simple things again and again and again. Let them have the fame and the glory. It's okay. Right? Too many people want to be Rain Man. They want to be the guy that called it. They want to be the guy that called top. They want to be the guy that called bottom. They want all the clout. It doesn't matter. I've been there. I've been the guy in 2024 early where I was saying a lot of I called it bullshit in Q1 and Q2 when I said that I was briefly ego maxing. I felt very cringe about it a couple months later. I recognized that that didn't make me that happy, right? Engagement is nice. Having people, say, wow, you're so good is kind of nice, but it doesn't make you more money. It doesn't pay the bills. You're online, you're anonymous, who cares, right? So don't get caught up in that stuff. Portfolio goals didn't make me happier. Withdrawals did. I think this is a no-brainer, but seeing the number go up on my portfolio didn't make me feel the way that I thought it would initially, but putting that money in the bank did. So always keep that in mind. If you feel like you're not euphoric and you're like, I need one more 2x, I need one more 2x, I need one more. Try putting some of that money in the bank and see how it makes you feel. I guarantee you it's going to change your world. Compounded positional trading is underrated. We talked about this. Q1 to Q2, man, if you nail one compounded one compounded positional trade, you are going to amplify your capital, right? You don't need to hit everything. You just need to hit the high conviction trades. Five times a year, there's free money on the floor. Pick it up and then do nothing. Outperformance. Existing positions and underperforming positions impact overall decision making. Practice portfolio spring cleaning. So if you have a position in your portfolio that you're thinking about too much and it's making you bearish on the market because this position is like 30% of your net worth and all it does is go down and you can't bring yourself to buy something that's good and going up because you're like, I don't want to lose more money. That position is weighing on your decision making too much and you need to do some portfolio spring cleaning. And sometimes it's as simple as selling something for an L to get it out of your mind, out of your system, out of your body, and move on from it. Practice portfolio spring cleaning. Some things in your portfolio are going to weigh too heavily on your brain and make you underperform. Obsession with perfect entries may prevent you from making money. I started making more money once I stopped sharing P&L cards in 2023. So in 2023 was pretty much the last time that I shared P&L cards. I used to trade publicly. I used to trade on my timeline. I used to tweet my trades. And after I would hit the trade, I would share the P&L card. And I recognized after a while that some part of that carries over into the trade itself. Some part of that makes me want to go, man, I want to hit a better entry. I want to nail this entry, right? And if the entry gets like front ran, you kind of go, I don't want the worst entry. I want the picture perfect one. And you just miss making money opportunities because you're thinking about the clout. You're thinking about the social trading. You're thinking about the P&L card. You're thinking about the imposter syndrome that you may have, that you need to prove to everyone at every waking moment of the day that you are good at what you do. So yeah, once I stopped caring, I improved. 2024, I was a better trader than 2023. I just didn't share shit with anyone because I don't care. I just do my own thing, right? And I think there's so much value in that. So try it out for yourself, right? If you're in a Discord where you're sharing trades with people, and the reason you share them is because you want the people that you're around to know that you're good at the game. Once you've gone through that enough times and that you've gained their respect and people respect you as a good trader, you don't need to always be proving that you hit something. You don't need to always be sharing the P&L card. And I think that you'll see that you actually trade better when you remove that element from your trading. Borrowed conviction leads to underperformance, right? If it's your trade, you're going to hit it. If it's your confidence and your conviction, you're going to hit it. If you're borrowing it from someone else, you're going to sell early, you're going to undersize, you're going to underperform. You may not even take the trade. You may paper hands when it goes down a little bit. Borrowed conviction is nice because you can get free money from your friends, but borrowed conviction will lead you to undersize, underperform. So keep that in mind. After competence, sizing becomes the entire game. I think that's a lesson that you can learn from watching this entire video. For me, sizing is the entire game. How do I get from point A to point B? What am I going to size? What position size am I going to take on this spot trade? How many chips am I going to put on the table? If I get a 40% move on ETH and then another 40% move on ETH and another 40% move on ETH, do I really care about nailing a 6x on this other coin that I'm going to size into with pennies, right? If I'm going to put pennies into 100x, that's going to do something for me. But if I put size and get repeated 20% moves or 40% moves, maybe I prefer that method. So sizing really becomes everything. Sizing is the final boss. Sizing is the final boss for me to overcome. And it's really the only decision that I have to make on a day-to-day basis as far as my trade goes, as far as my portfolio goes. Sizing is really everything. Have more fun. Don't take it so seriously. Stress will cause fuck ups. 2024 is the most fun I've ever had in crypto. There's been a lot of bad moments too, but just day to day, having so much fun with my friends in Discord, in the clinic, in Paragon, and everything like that. Just taking it less seriously, not being the guy with a stick up his ass and being like, I gotta make it, I gotta make it, I gotta make it, because I've been there. I've been the overly kind of intense person where I'm just really not that fun to be around. I'm just always grinding. I'm always serious. I'm always thinking very seriously, and I learned to have a little bit more fun, and it's really improved the experience. Here's a fun one. Everyone calls top on the first leg. No one calls top on the second leg. Something that I've seen numerous times, either on the 1 hour chart or the 1 week chart. Everyone loves to call top on the first parabolic move, and then on the second move, a lot of people expect continuation. Watch out for that. I'm not going to give out more than that. It's just, here's free alpha. Everyone calls top on the first leg. No one calls top on the second. On the second one, they look for more. I learned the importance of being an emotional manager. Make decisions with future outcomes in mind. If something you think has a poor outcome either way, avoid that, right? Just at all costs, right? Make decisions that'll make the future you happier in trading and positioning, right? If you're taking a trade that has kind of 2 subpar outcomes where you're not going to feel great either way, just avoid that thing entirely, right? Why put yourself in that position? It ain't worth it. You'll find another trade that has better outcomes. You always want to be an emotional manager. I think a lot of people talk about emotions in trade. You want to be emotionless. You want to be emotionless. Not true. You want to have emotions, but you also want to manage those emotions as far as keeping yourself in a good mindset, keeping yourself healthy, having enough sleep, making sure that you don't have positions that are weighing on your mind. If you have a position that's just mentally draining you, fuck off with that position. Get it out of your portfolio, right? FOMO prevention exposure. It's a fun one. If something's causing you FOMO, throw $10 in it, right? This is something that I did with Fartcoin. Fartcoin was really annoying me. I really hated that it was going up. I was mid-curving it. My friends told me about it at $1. I had FOMO, and I threw money at it at at a $100 million market cap. And I said, if this goes to zero, it goes to zero. If it goes up a lot, I'll make some money and I'll be happy. And I'm very happy that I did that. And it wasn't a sized position, but because of how much it went up, it's now become a sized position. And I'm happy. So that's kind of like FOMO prevention exposure. Just throw some chips in there, right? Just throw some chips in there, and you might be pleased with the outcome. And if it goes to zero, you're not that upset. Leaving runners in large positions, lack of confidence in decision making. We talked about this one already. I can improve on having more confidence in my decision making. There's no point in leaving 20% of a position open. Evolving R. This is the concept that the closer you get to your target, the worse your evolving risk to reward is. So let's just take an example here. Let's say I longed this location with this is my stop loss and this is my take profit, right? Like this is my take profit. Oh wait, I'm not showing you guys the chart, right? If this is the concept of evolving R, that the closer you get to your target, the more risk you are taking on. You basically ask yourself this: would you take this trade? Right? This is the trade you are now taking. You are now taking this trade. Does that look like a good trade to you? No. So this is the concept of evolving R. The closer and closer you get to your targets, the more risk you are now carrying, the more risk you need to remove from the table, either by trailing stops or starting to clip out profits. A lot of times for me, I'm heavily taking profits at 70% of the way to my target. I don't care about hitting the full thing. The round trip risk is too risky for me 99% of the time, especially as an active trader. FA matters in a bull market. Talked about this a lot. That's something that you can avoid as a trader. You can trade any asset based on the chart. You don't need to worry about FA, but in a bull market, it comes back in full force and definitely needs to be paying attention to. You can make a lot more money if you're paying attention to fundamentals of the market, what the market likes, what it accepts, what it wants, the tokenomics, the unlock schedules. These things matter. Don't take it for granted. Something I learned the hard way over the years. I think I can improve a lot on my performance if I start focusing on fundamental analysis. And last but not least, the best traders are not actually traders. They're speculative premium arbitragers. They take something with a lot of speculative premium, meaning they're speculating that something like Pepe may reach the market cap of SHIB, that there is a speculative premium placed on this coin. And the closer and closer you get to closing that speculative premium, it's the same concept of evolving R. And the best traders in the market aren't necessarily perp traders, but they're people that can capture the bulk of the speculative premium and close their positions when that speculative premium is gone. They're basically arbitraging trades from having a lot of excess potential to something that doesn't have that much excess potential. And when that excess potential is removed, they don't care that the coin can possibly go up another 2x. They just simply care that they caught the meat of the move. I'll give you one example of, something that always comes to my mind. This is the coin that taught me this. I didn't include it in last year's Outlook, but this is the coin that taught me this, was Caspa. I don't know if it's on my watch list. And we're going to end the stream here, or we're going to end that video here. But, the speculative premium on this was the market is underpricing this new technology. The market's not caring about it. The market's not caring about this new narrative. Now the market is pricing in more success. It's saying that, this can replace this can replace that. But I feel like I took a coin from basically zero valuation. I didn't buy it there, but zero valuation into fairly priced valuation of $4 billion. Now, if it goes from 4 billion to 10 billion, I don't really care, right? I've extracted the speculative premium, and now it's on to, can we actually prove the fundamentals of this, right? So something like Hyperliquid, right, that is being priced as a perp dex, but the speculative premium is that this can also be an L1, which is what causes Hyperliquid to reprice, this isn't the full history, from $3 to $30. That is a speculative premium. Now that you've been priced as an L1, what is the upside from here? It's kind of like, prove to me the upside. So that's the speculative premium that is placed on a trade. When that speculative premium is closed, that, there could still be upside, but now it's more of a prove it to me upside. And yeah, I think the best traders in the market are the ones that do this the best. And they pretty much rinse and repeat. They look for opportunities where there's excess. They trade to remove that excess. Once that excess is removed or decreased to a position where they don't care, they move on and they look for the next one. And that's going to do it. Just like last year, I don't expect even a little bit of you to fully watch this video. I expect maybe 99.9% of you to not finish this video. If you are one of the very few people that watch this front to end, all that says to me is that you really, really want to make it and you want to put in the hard work. And you're trying to extract every edge that you can from other people. Any lessons that someone can impart, you're trying to take those and internalize those, and you're on a journey, and you probably have a bigger chance to make it than the people that don't. And I'm not saying this because it's my video. I'm not saying this in an egotistical way. All I'm saying is that I've been there before. And in those early stages where you're learning and growing from other people, you need to do more than your peers. You need to do more than those other people that are looking to try to make it. You need to extract every edge that you can. And I know it's very easy when a guy is talking for an hour and 20 minutes to zone out completely, to not even pay attention. But I think the people that do and the people that listen to the whole thing, even if you listen to this on 2x, like, it doesn't matter. You got a hunger in you that people can't replicate. There's a hunger in you that other people don't instinctively have. They don't want it as bad, right? They've just zoned out. They've tuned out. It's too boring. It's too long. It's too this. It's too that. Let me read the Spark Notes. Okay, I just took a screenshot of what Doc said. I skimmed it real quick. I didn't need to listen to the full hour and 20 minutes. So for the few of you that listen to this all the way through, leave me a comment below, man. I'd like to know who you are. I'd like to give you a shout out. Anyways, have a good one, guys. I'll see you next year.